From the floor of the CME Group, this is Danny Riley on this Wednesday, May 19th. Again, we're seeing a huge day here in the markets, ladies and gentlemen. The S&P opened, it opened down slightly at the 1112 to 1112.5 to 1113.5 level. It shot up to 1123.80 or 22.80, and that was when this desk came out with what they call the 10-handle rule. And the 10-handle rule works like this. Whenever the market moves in 10-handle increments from 12.5 up to 22.5, the 12-handle rule goes into effect. And that means that these guys at this desk put out sell recommendations. After we put out that 10-handle rule, the S&P went all the way down to a new low at 1099. Now along the way there were some levels that we stopped at, but straight out, everybody, the markets don't look good here, okay? They've had a long up move, and we're just on the cusp of the beginning of a new down move in the market. You know, for a long time, as the market started getting above 1050, 11.5, 12, everybody talked about the 1050 level as a possible downside retracement level. Well, you know what? It looks like this could happen a lot quicker than most people thought. You know, right now what we've got, we started out the day with high mini volume, around 650,000 minis traded, or 600, yeah, right around. On the day right now, we've got about 2.3 million. That's exceptionally good for this time of the day. We're only 11:30 Central Time, Chicago. As far as what's going on right now, the market got down to 1099, and we're having a big bounce. Right now, as we talk, the S&P's just rallied 11 handles. The PPT is probably back behind this kind of move up, and this would make sense for a lot of reasons. One, they seem to be trying to come to terms with what's going on in the euro and in Europe. Some of this is coming out a little better. There was a little better comments coming out of Europe this morning about, you know, how they're going to handle the euro currency. And the fact that the market's so oversold here and has gone down so much in such short order, the markets are getting a little bounce here. You know, we don't think that this is the end of the sell-off. As we said, we have talked about the back and fill patterns that have helped the market go up over the last 15 months. Like we said a couple days ago, that's out. This is now, we've seen that the price action is flip-flop. Now what happens in almost every rally that we see, it's being sold. Now, as far as the rest of the day is concerned, you know, we had one of the guys on the IM asked us a little while ago what we thought about the latter parts of the day. You know what? Nobody gets a free ride around here, especially in the S&P. This just doesn't work where you can come in, buy and sell, make money and leave every day. It's just not like that. The pit now, on the other hand, has been doing really well over the last couple of weeks. This is what we have always said, an eat what you kill world. And when those orders are flying around in there, those guys get to pick up in between the bid offer and the mini with the bigs, and they make money on this kind of stuff. On that big down day, there was a bunch of locals in there that said that they made huge money that day. Now, back to reality. The rest of the day, you know, we don't really know for sure what's going to happen here, obviously. But what we do know is that what we said just a couple minutes ago is that nobody gets a free ride here. And what would really probably twist people the most would be that we go back up and make new highs toward the end of the day. Statistically, today and tomorrow are good. Well, I should say it like this. The S&P statistics for the May expiration are good for today and tomorrow. Obviously, today's not working out all that well right now. But you know what? We can't rule out that there could be some kind of bounce going into Friday before the May expiration. We've had a good down move here today, and we'll be back tomorrow with another update.